Imagine waking up on a Monday morning, turning on the TV, and hearing the anchors say, almost in panic, that Wall Street just broke. Now imagine your salary, your savings, even your retirement, losing almost a quarter of its value in just one day. Sounds impossible? Well, that is exactly what happened on October 19th, 1987, in what became known as Black Monday. In this video, you will understand what Black Monday really was, why it happened so suddenly, who was involved in the chaos, what the consequences were for the United States and the world, and of course, whether something like this could happen again. All explained in a simple way, with everyday comparisons and without complicated financial jargon. Section 1. What was Black Monday? Think of a supermarket. In the morning, an apple costs $1. In the afternoon, the same apple is half the price. In the stock market, it was even more radical. In just one day, the Dow Jones index fell more than 20%. It was the largest single-day drop in history up to that point. Giant companies like Coca-Cola, IBM, and McDonald's lost billions of dollars in market value. Ordinary people watched their savings disappear in a matter of hours. And the big question was, how could something so massive collapse so fast? Section 2. Why did it happen? Here is where it gets interesting. It was not just one cause, but a combination of several. First, there was fear of inflation and rising interest rates. Second, there was a new system called program trading, in which computers automatically sold stocks when prices began to fall. This created a domino effect. Third, there was overconfidence. In the months before, everyone believed stocks would keep rising forever. It is like being at a party. Someone hears a strange noise and runs. Another follows. Soon, everyone is running, without even knowing why. But who were the main players in this story? Section 3. Who was involved? At the center of it all were the big investment banks of New York, individual investors who followed the panic, and of course, the computers that were starting to dominate trading. Wall Street believed technology would solve everything. But on that day, the algorithms did the opposite. They made the chaos worse. The Federal Reserve, the central bank of the United States, had to step in quickly to provide liquidity and calm the market. And the next question was, would the damage stop in America, or would it spread around the world? Section 4. What were the consequences? The impact did not stay in New York. Stock markets in London, Hong Kong, and Sydney crashed right after. It was a global domino effect. Some investors lost fortunes in just a few hours. Families saw years of savings wiped out. But at the same time, those who stayed calm and bought cheap stocks ended up becoming rich when the market recovered. It was like an unexpected clearance sale. For some, tragedy. For others, opportunity. But what was done to prevent this scene from happening again? Section 5. What changed afterward? After the shock, regulators created circuit breakers, a kind of pause button that stops trading when prices fall too quickly. The idea is to give investors a chance to breathe before making desperate decisions. Governments also started to keep a closer eye on the role of technology in trading. But even with these changes, fast crashes still happened, like in the financial crisis of 2008 and in 2020 at the beginning of the pandemic. So the question is, are we really safe, or are we just delaying the next big crash? Conclusion. Black Monday proved that the market is like a house of cards. It can bring prosperity and growth, but it can also collapse in the blink of an eye. The big lesson is simple. Too much confidence can be just as dangerous as fear. Understanding the past is the only way to avoid repeating the same mistakes in the future. Now tell me, do you believe that with all our technology and artificial intelligence, another crash like 1987 is impossible? Or is it just a matter of time? Write it down in the comments. I really want to hear your opinion. If this video helped you understand such a complex topic in a simple way, give it a like and subscribe so you do not miss the next episodes. And if you want to keep learning, I recommend the video about the 2008 crisis, when giant banks almost dragged the entire world into collapse.